The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Green Day, it's not just the name of a band, but it's actually what's happening today in the markets. Everything's kind of green. So joining us now to discuss is Jason Pagoulatos. He's markets associate at Delphi Digital. Welcome, Jason.
Hey, everybody. Thanks for having me. It's great to be here.
Great to see you. So, as we said earlier in the show, of course, ETH is up 12%. At least some of it's been attributed to this shadow test. Is that an accurate reason why ETH is up, or are there other macroeconomic reasons for it to happen, or market-specific reasons? We're seeing other crypto up across the board as well.
Yeah, no, it's certainly a factor, without a doubt, right? Any positive news at this point is a welcome thing for markets, but it's definitely not the only reason ETH is up. I would attribute just the broader move in crypto markets, more so just to this typical price action you see in the aftermath of what we saw happen in June, right? We saw that huge liquidation cascade from like 28, 30K all the way down to 2017's all-time highs, even briefly dipping into the 17Ks. And then typically after you get these huge liquidation events, right, we had one in May when Luna and UST collapsed. We had one in June when 3AC started liquidating its positions, and then the contagion after that. But one thing you typically see in the aftermath of these large violent liquidation events is you typically see price oscillate within a range or consolidate for a couple weeks or a couple months, depending on the magnitude of the previous drop, before it ultimately decides if it wants to continue the trend lower or maybe put in some kind of reversal. So in addition to there being some crypto catalysts like the ETH news, it's also kind of just how you'd expect price to react in the aftermath of what we saw in June.
The markets are about as active as the cat that's sitting in your window right now. I assume that's yeah.
That's my cat.
Yeah. But we saw the China's GDP came in today, and it was a disappointment. It was up 0.4% versus the expected 1%. Some of us remember when GDP numbers were multiples of that. But this is generally, considered not great news, particularly because of the heavy interest in crypto in Asia still, despite China's regulation. So I guess the question is, with that kind of a bad news, why today? Why was today a particularly positive day when something like that would have suggested that the enthusiasm, at least for crypto, on that side, in that hemisphere, is maybe not as strong as you would think?
Yeah, so I think I think pretty much all macro numbers at this point are coming in, and they're being quite disappointing, right? Inflation keeps getting worse, month over month, year over year changes keep accelerating, which is obviously not what you want to see. You have China's GDP print coming in less than expected as well. At least the way I would attribute this price action or this kind of bounce in risk assets, because we're seeing it in equities as well, right? Equities aren't open right now, but pre-market futures are trading. They're spiking a little bit right now, heading into the open. So I think how you can attribute this kind of price action and the behavior we're seeing in markets, at least over the last 24 to 48 hours, in the aftermath of the CPI print, because I think the CPI print is probably a bit more important just generally for crypto markets than China's GDP print. Everything's so highly correlated at this point. All eyes are on the Fed. And when you get such a high inflation print, it kind of tells markets that the Fed is going to act more, which is going to hopefully accelerate the timeline to which things get better, right? In which they hike, inflation comes under control, markets go through their turbulent period and then start recovering. It kind of pulls that timeline forward a bit. But so that's the kind of way I'm looking at the shorter term relief, if you could even call it that right now in markets.
That's a few jumps, isn't it? Because you're basically hoping that the Fed raises rates enough that it creates a mini recession, or at least cools the economy, which slows everything down, but that hopefully that'll be just enough to eventually do things several months, if not, quarters ahead. I mean, that's kind of a few jumps there.
Yeah, I mean, you have to realize that risk markets and equity markets and crypto markets are all forward looking, right? It doesn't necessarily matter as much what the outlook is today. It matters a lot more what the outlook is going to be in 6 to 12 months from now. So if we can kind of envision a world where the Fed hikes rates, because we know they're going to, the amount to which they hike in July and after that is now more up for debate, whether or not it's going to be 100 basis points, 75 basis points, right? However, what's important is the world that we envision 6 to 12 months from now. And if they do raise rates, and if that theoretically leads to inflation kind of coming under control, it then gives the Fed more room to pivot in the future, hopefully in that 6 to 12 month timeline, which would then be beneficial for risk assets. That's the kind of way that I think about it.
We know what Keynes said about the long term.
Yeah, right.
Well, continuing on with this cat theme you've got going on, do you see this as more of just like a dead cat bounce, considering, this longer term outlook with, red hot inflation? We're getting information on China's GDP growth, missing expectations in the second quarter, and we're still seeing the fallout of various crypto lenders. And I wonder if there are more dominoes in your view that may be left to fall for the crypto industry.
Yeah, it's certainly a non-zero probability. I was on a Twitter Spaces with a couple of people a couple of weeks ago, and we were talking about this, and we were all trying to like ascribe a probability in the aftermath of 3AC of like how much more contagion or how many more dominoes, so to speak, are left to drop. And a bunch of people were in the camp that say like 80 to 90% of crypto native things that can go wrong have gone wrong. And I'm not as high in confidence as say like 80 to 90% are gone. I still think there's probably some things that we're all not really considering, right? Because these are hard things to kind of forecast, right? Everybody's looking at them. I know you mentioned in the previous segment the concerns around Tether and the stablecoin there. So like there's obviously tons of risks that still aren't being factored in fully, in my opinion. But I think the most important thing to remember is that we're in a macro-driven bear market. It's not a crypto-native bear market right now.
Do you see a low? A lot of folks are predicting a low of Bitcoin around $13,000 to $15,000. Does that seem about right to you for a Bitcoin bottom?
I think it ultimately like crypto won't bottom until the macro situation shows signs of recovery. So it's like, picking a number is kind of arbitrary. The way I would look at it is, if I had to just pick a number, I would look at the full price history of Bitcoin with like the Brave New Coin Index or something like that. And then I would just go look at the 2017 to 2019 cycle, right? The bull and bear market of that, and kind of look to see where all of the volume transacted, where the majority of that volume transacted was. Because that's probably, if things are going to draw down like they have in previous cycles, you saw 85% drawdowns in Bitcoin, and you saw 90+% drawdowns in ETH and many alts, right? So an 85% drawdown in Bitcoin is roughly around like 9 to 12K, which kind of corresponds with the vast majority of where all transactions occurred through 2017 and 2019. So that's the kind of way I try to like picture how the market is structured in terms of where people were active in previous cycles, which will then hopefully give you a clue as to where people might start to get active again. But ultimately, it doesn't really matter what the price of Bitcoin is. It matters what the prevailing market dynamics are with the macro backdrop. So until we get some sign of recovery, I think markets probably kind of bleed out over the next several months until we kind of get more clarity on that front.